Maverick Traders, this is Robb Reinhold, and we are just done with the first monthly options expiration cycle. We haven't run the numbers yet, but it definitely looked like it was a good cycle. Just wanted to announce that we have sent out 1099s in the mail, so if you are waiting for your 1099 from your profits from last year, you should get those this week. In this session, we're going to go through the news of the week, take a look at the markets. We had a big breakout. You guys already know that. We're going to see where the market is now, what's likely to happen. We're going to score everything. We had a lot of movement in sectors. And when you take a look at this breakout we just had, it was a narrow breakout. There were a lot of sectors that not only didn't participate, but actually went lower this week.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's get ready for the week.
On Friday, we got the breakout that we thought we'd get, and we broke out to new all-time highs. Not just like little highs. This is all-time highs against the major averages. The Dow, the S&P, and the NASDAQ. Small caps, the Russell, no, not there. Actually, not even all that close. Now, this did this in spite of the bond market continuing to rise. I've been saying that the bond market down below 4% is super bullish for stocks. Now we're up to 4.1, and this week we crept up to 4.15, and the stock market completely ignored it. And what we've seen is just about 2 weeks ago, there was an 80% chance, and that's what the market was figuring in. And I'm going to give you the URL to go to this. It's called the Fed Watch tool. It tells you what the actual odds are for a percentage for a rate cut. A couple of weeks ago, it was 80% chance that the market was going to get a rate cut in March. Now it's down to like 45%. I still think that's way too high. I don't think the Fed is going to cut rates because look at this economic data. We got retail sales. I mean, look at that. So strong, so incredibly strong. We also got these unemployment claims. This number is phenomenal. Below 200,000. That is a really, really great number. And then we got consumer sentiment still looking great. Okay, we got a little miss on existing home sales. But look, this economy is still so strong. I don't understand how the Fed can risk a rate cut when things are fine. Like, you want to cut rates when things are starting to deteriorate? We are seeing no signs of deterioration in this economy. Let's take a look at some of last week's trades, and then we'll move on and take a look at the week. We had a long on T-Mobile, beautiful high base, and we broke out. And I really want to point out these candles. Some trades they just tell you you're in the right place. So let's take Tuesday. Tuesday, at one point, it gapped down. So the stock gapped down. Here was the close the day before. It gapped down. It ran down, and then by the end of the day, it was back up. Then the next day, it opens up, runs up. Next day, gaps down. It gaps down again. By the end of the day, it's up at its high. Look at this. Gap down again. Look, this stock wants to move higher. I don't know how much higher. I know I've got a 165, 170 on this. But this one just looks so strong. It was up about 2% for the week. Next one was CSX. Now this one wasn't quite as good as far as the candles. You can see we got a gap down and a doji. And then we got a little bit of a doji. It's trying to work its way back up. But it's clear it's not ready to break out of this base yet. We'll have to wait and see what happens. We definitely have more time on this one. This one is a mildly bullish trade to the upside. Then we had two shorts on Lee Automotive. This one tumbled 11% for the week, so great call on LI. And then we had, this was a 1 week trade on CVE, Synovius Energy. And we had the 15-16 bear call spread. Again, this was a really good trade because we got it for about 25% of the spread. You can see it came all the way down, closed under 15 bucks. Everything expired worthless, or if you were in puts, everything was exercised for max gain. So trades worked out really well, and it's so nice. When you do basket trading and you're trading longs and shorts, there will be periods of time where you make money on both. There's also going to be periods of time, like in a really strong bull market, if you're doing short trades, it's going to drag on your performance. It's just very difficult to make any money whatsoever on bearish trades in a very strong market. And vice versa. When the market's falling apart and you still have some bulls, they're going to be a drag on you. But there's periods of time, like this one, where you can make money on both sides, and it's really, really nice. If we take a look at the numbers on the week, we had a pretty decent week to the upside. Dow was up 1%, S&P up 1.23, Q's up 2%. I want to keep pointing out this Russell. The Russell has been the underperformer. And I talked to a couple traders this week, and they said, hey, shouldn't we go after the underperformer since it's going to play catch-up? And I said, look, logically, that makes a whole bunch of sense. But in my 25 years, any time when I've had this idea and I picked the loser, it was best if I would have stuck with the winner. And that's exactly what we saw here. Oil, gold, not really going anywhere. Dollar is really keeping these things pinned to about where they are. Let's take a look at these charts. We've been pretty clear calling for a breakout, and the breakout came. No question that we got the breakout on Friday. So the question is, where from here? Where from here? Where's the next level? We're at all-time highs, so there's really nothing we can do to look back. We can run some Fibonacci extensions and try to find some place that is going to go. But look, that's just, I call it hopium. It may go there, it may not. It's just, we don't know. But what we do know for a fact is it is absolutely bullish. I shared this story on Thursday in my daily video. I want to share it again, just so make sure everyone hears it. For most of my existence with Maverick, and it's been 25 years, I have not been out in the public. I've been chatting with our traders and everything. A couple of years ago, we started to release some stuff out on YouTube, and I started doing some podcast interviews. And now I actually get interaction from the public. And it's pretty funny. I made a call that we're going to break out this week. And I got a comment. Oh, you got to love the random internet comments that you get. It's new to me, so I'm new to this. And I'm like, oh, okay. And the person's like, nope, I don't see it. I don't see any way this market breaks out. And I said this to them in jest. I said, look, once you finally give your life over to technical analysis and just have faith, you don't need to think anymore about it. Now, look, it's kind of tongue-in-cheek with the religious bent, but I then thought about it, and I thought, yes, I used to doubt everything. I used to be like, sure, it's breaking out, but it's done this, and it's up so much for the week, and it's blah, blah, blah. I always sabotaged myself. And then when I finally bought into technical analysis, now look, technical analysis doesn't work all the time. We know it's just statistics. But when I finally said, it's bullish, be a bull, and then that's literally the end of the thought, I became a better trader. It's something that everyone should strive for, to where all those yeah buts, the market's breaking out. Yeah, but it didn't happen on good enough volume. Yeah, but we're already up so much. All of those yeah buts just go away, and you purely can just trade the technicals. So I just wanted to share that story to really get you thinking about where you are in your progression. And when you see a chart and you see a breakout like we saw here, what story are you telling yourself in your brain? Are you telling yourself, hold back because of? Are you telling yourself, this really isn't true because of? All of those are deep-seated biases within you. That's part of what we do at Maverick, try to get those psychological biases out of you to where you're just trading. This is a clear breakout. When this happens, you typically get one of two moves. You get the move that just keeps going. And that typically happens after a long period of a base. This was about a 1 month base. I'm talking about 3-month bases, 6-month bases. I don't think this is one of those where we just take off and run. So the other one that's fairly common is to, everyone gets all excited. We get all this energy together to break out. It breaks out for a couple days and then it retraces. And the retracement point is going to be back to the breakout point. I think this is much more likely to happen than the takeoff and run. We'll have to see, of course, this is just me speculating, but either way, this market is clearly telling you, technically speaking, it wants to go higher. It may not go any higher. This might have been the literal highest point it's going to get to and fall next week. We don't know that, but what we do know is if we follow technical analysis religiously, pun intended, that we get good results. This is a nice breakout. I do think we're going to get a little bit of a pullback. I think we probably put in another day or two higher and then pull back. I'm much more happy to enter off of that little pullback, but the market rarely listens to my opinion, and it's going to do what it's going to do, and it's up to us to adjust to that. I want to point out the heat map, because if there is a yeah, but, the market broke out, yeah, but it's this. It was only 100 stocks. It was only like the NASDAQ 100 did great. They did fantastic. The rest of the market, take a look at it. It's not so great. And there's some areas that were just really terrible. Real estate, energy, utilities, materials, just straight red. Just absolute straight red. Hardly a green one in there. Financials, fairly mixed as well. So here is your yeah, but. Okay, yeah, but the participation wasn't that great. Okay, I will absolutely give you that. I'm looking this week, market going a little higher, small pullback. Don't fight this trend. I've been saying this since November. People doubted it in November, the run. I said, look, you're right. I can write an essay on it too. But just get on the train. You can still write all your bearish essays on how this market's not going to go any further, but at least ride this move up. And again, I've been saying that for months. Here we are. It's the same thing. You can fight this if you want. That's not the right way to trade. The right way to trade is to make money. The way you make money is you are on the train. Whether the market's going up, down, or sideways, the closest you can get to where the market is, the easier it gets. We do have some earnings this week, so expect some pretty decent volatility. Big ones on Tuesday, Netflix. We got Tesla, Visa. And then the week after that, we're going to get some of the other big tech stocks as well. So figure there's going to be some earnings that are going to cause some movements. There's no question about it. Ultimately, the market is more bullish than bearish. As far as economic reports go next week, I'm going to point out two. Advanced GDP. This is the first reading of fourth quarter GDP. So this is the first reading we get. Estimates are for 2%. People are going to say, oh, 2%, that's not that good. Do you realize that we pretty much averaged 2% from 2011 to 2020? That under Obama, the GDP, I think, was 2.3%. Under Trump, it was 2.5% before COVID. I'm taking COVID out. Those were great years. 2% GDP is just fine for this market. That comes out on Tuesday, and then Friday, we've got core PCE price index. We're starting to see inflation measures around the world. We got a couple from Canada and the UK last week where it's slightly higher than expected. We got one from the US that CPI was slightly higher than expected. We're starting to see these around the world. The question is, are we going to see it in this number? If we do, we're going to have even less chance of that March rate hike, which is going to cause a little bit of problem. So I do think that Friday number is probably the most important one on the week. This is our outlook. I got a +3. It's not my opinion. It's literally scoring technical analysis. We've got everything going our way or going up. Weekly outlook. I've got a 0. As I said, I don't think this one has spent long enough basing for it to be the one that just keeps running. Typically, those are like 3 to 6 month bases. Those have a lot of power. This one, I think, fizzles in a couple days. I think it then bases, pulls back, and then continues to move higher after that consolidation. So that's what I'm looking at. I still want to be bullish, but think about it. I'm leaning on the bull side in all of my trades. I have way more bulls than bears. This week, I think there's going to be more of a pause. So I could make some trades this week, some bearish trades that will bring down my net delta for this week. And then once those expire, my portfolio goes back to having more positive delta in it. I mean, just think about where we are in cycles and how these things move. If it does take off and run, yeah, I might be giving up a little bit of the profit I would have got, but you can always just adjust back to something else. Let's go in and take a look at all the sectors and give them a score from +3 to -3, because we've got both. As I said earlier, this was a narrow breakout. So any of you who are the yeah buts, it was a breakout, yeah, but this is what you could point to. Tech was the big one, 4%. Tech was up 4% last week. Tech is up about 8.8% in 2 weeks. Do I think tech is likely to have a pullback? Sure. As you can see, comm services was our other sector we liked quite a bit, and it had a decent week. These had decent weeks, but look at this. Half of these sectors were up, half of them were down. This was a narrow run. I will absolutely admit that. Utilities got crushed. Energy was also crushed. We've liked energy as a short for a while. And materials have joined energy on the negative side here for the first time. Healthcare was also one of our +3 sectors. It did have a pullback, but I'm going to show you a chart. It had a really nice recovery by the end of the week. Nothing really changed in that sector. Well, let's go take a look at them all individually and score them. Last week, utilities was a 0. It was pinned between the moving averages. And you can see we had a pretty big fall. Okay, we had a pretty big fall. We might have a little bounce back up, but this is bearish. This is just a straight up -2. And then once this 50-day moving average starts to come down, it's going to go to a -3. There is bearishness in utilities right now. How long will it last? Nobody knows. That's the nature of trends. But we do know that it's telling us to be bearish in that sector. Here is the communication services sector. It was a +3 last week. It's a +3. Really nice little pullback. Came, gave us a great little hammer candle right on that support line and took off, making new highs. So +3, no question about it. We had real estate at a 0 last week. Sorry, we had it at a +1 last week, and it came down to a 0. And you can see it's between moving averages. It's not really giving us any good sign, so it is absolutely open for some sideways trades in real estate. Here is the XLV, which is the healthcare sector, and you can see it had a pullback this week. Unlike some of the other sectors, it had a pullback, gapped down, but then had nothing but buying. Not a great follow through on Friday. But to me, this is a great looking bull pullback. If I'm looking at what sector probably is the best sector next week based on where it is in the pattern, hey, this thing's got some good momentum that could push it back up close or past the last highs. +3, still maintains a +3. Next up to industrials. Industrials didn't really do anything here. You can see we're just trading in this range. It's got to clear out of that range. It was a +1 last week, and it's going to move to a +2. Just it's back up right on that 20-day moving average. So it's okay, not great. Take a look at the difference between the two. Financials have been basing for a long time, and this run off the bottom here, completely different than what we just saw in industrials. So we're going to give XLF a +2 as well. But this one has much more momentum than the XLI does. On to consumer. So consumer fell into the middle here, and you can see it's there. It probably makes a run up to the top of the range, but there's just no momentum here. Just no momentum until we break this point here. Then we can upgrade it. But for right now, it's a 0. It's got to be a 0. On next to tech. And of course, you see the breakout, the big breakout, big volume, big candles, big everything. Okay, so this thing's had a big run. No question at all. It's probably a little tired, probably pulls back a little bit. You want to be a buyer on those pullbacks. You don't really want to be a buyer on Monday morning, but you probably want to be a buyer Wednesday, Thursday if we do get any sort of pullback. +3 for sure on technology. This is where we saw some real deterioration in the market. Last week we were at a 0, and you can see we are now down below the moving averages. We're hanging out on that 50, but this one is definitely deteriorated to a -1. And energy, last week it was a -2, and this week we got the dreaded moving averages both turning down. This one has officially moved to a -3. It is quite rare to have both a +3 and a -3, but this week we actually have it. I want to kind of show you just what's going on here. I call this the haves and the have-nots. There's no question where the strength is. Industrials, financials, tech, comm services. There's no doubt where the weakness is. Energy, utilities, materials, and then we've got a bunch of stuff in the middle. You can trade really well in this environment with a basket strategy because you're long some, short others, sideways others. This is the perfect market. You just have to pick the right combinations. So speaking of picking the right combinations, I think I've got about 4 trades for you today, maybe 5, based on some of those sectors and sector movements. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years, and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. First one I want to go through is utilities. Utilities was at a -2. So looking for a negative trade in utilities. Found this one. This is WEC, and I wanted to go back a little bit further so you could see the chart. This here is a bear flag pattern. Again, some of you may know the bull flag pattern where it runs up and then it has this really shallow downtrend. So it does put in like lower lows, lower highs, a downtrend, and then it breaks out and runs. This is a pretty common pattern in bullish stocks. This one is just the opposite. It's fallen substantially. Then it has this really narrow, flat uptrend and then falls and breaks. Ultimately, 79 is its next support. If we break through that down to 76, the question is, how do you want to trade it? Well, you get to choose how directional you are. The first one is the February 16th 82.50-80 bear put spread. The second one is the 80.77.50. One is going to be non-directional, and the other is going to be very directional. So for someone doing the 80.82.50, it's right there. The stock is at 80. If you enter this, you're going to pay $1.50, which means you're going to have $1 of upside, which means that 81 is your break-even point. That anything below 81 by expiration, you're going to have your max gain. You can see it doesn't even have to fall. It could stay where it is, and you're going to have your max gain. If you go to the 80.77.50, you now need to see a fall. You now need to see it fall. It's going to be a delta play, not a theta play, and you're just calling for direction. As I said, you get to pick and choose how directional you are with options. That's a great thing. When you're just buying stock or shorting stock, you don't get to choose how directional you are because they're all directional. It's all a delta of 1. You get to choose a delta of 2, 0.2, 0.4, 0.6, 0.8. You get to choose how bearish you are on these trades. This one for me, I'm going to be doing a theta trade. So the 82.50-80. Next up, real estate was also a sector that was just stuck in the middle. So we have real estate as a 0. We're looking for something, that doesn't look like it's going to break through to new highs. We have this stock. It came down. It broke through this pretty key support, but it did not break this next key support and the moving average. There's nothing in this chart telling me that it's really at risk to break out and run significantly above 60. We did some technical damage here. We should have held these levels. We didn't. I'm looking for something in the middle here. What's available was the 57.50. So this has 250 strikes. So you could either do the 55, which I didn't like that. I didn't like that at all. The 57.50. So this is going to be the trade. The butterfly right here. Again, this is going to be your profit area, somewhere in this range. As you can see here, this is just a butterfly. We're saying we don't think it's going to go higher than 59.50. We also don't think it's going to crash and break down much below 55.50. We want to be right here in this area to capture that time decay on this trade. So it's a zero sector, it's a zero trade. Everything is matched and aligned nicely. The financial sector has a lot of momentum. We saw that chart. We saw that industrials wasn't quite there yet. We saw financials was turning up very hard by the end of the week. Here we have Goldman Sachs. I'm sure Goldman Sachs has earnings here in the next little bit. Actually, sorry, I think they already announced. Check the earnings. And I actually wanted to talk about that because I've had a couple questions about earnings. Some people say avoid earnings altogether. And the reason they say that is earnings bring unpredictability, and you get big moves, and in trading, you want predictability. However, there's also strategies like the straddle. Well, that is, it's designed to play earnings. It's designed to play unpredictability. And if you know how to use that strategy, but you're avoiding earnings, it doesn't make any sense. So I wanted to just spend a second here and be like, hey, based on the strategy you're using, you should avoid some earnings and not others. The rule I have personally, if my trade has more max risk than I have max reward, I don't hold through earnings. So for example, let's say I'm in a spread, and right now I bought the spread a little bit ago. It was a $5 spread. I bought it for $2, and my spread is now worth $3.50. Well, I now have $3.50 of risk and only $1.50 of upside. It doesn't make sense. That's asymmetric risk. I'm going to take that trade down. But let's say I bought a $5 spread for $1, and going into earnings, worst case scenario, I lose $1. Best case scenario, they beat, it jumps up and I make $4. Do you see how earnings is good when you have a strategy that gives you a nice asymmetric risk reward? If you are buying stock as a trader, you should never hold over earnings. It's a bad idea. If you are selling options, it's even a worse idea. I mean, asymmetric risk is really what you're worried about. I know we talk about know your earnings, avoid the earnings. I get it. We did that for good reasons, but you know, it's the same thing as when you told your kid driver. So I've taught both my kids how to drive. Keep your hands on the wheel at 10 and 2, and then I go out and I drive with my knee while I'm eating a hamburger. You can do that once you're good. Once you're good, you can use your knee. I would never advise my 16-year-old or 15-year-old to use their knee when driving. So I wanted to get that out there because that's been coming up quite a bit. You can trade through earnings as long as you have strategies in place that are designed to handle earnings. Vertical spreads are really, really good ways to handle earnings. So I'm going to point this one out here. This is February 2nd, 380, 390. This is a vertical spread. Right now, the stock is at 382. What's going to happen is, remember, you're long one option and short the other option. So when and if volatility spikes, there's a muted effect. When and if volatility craters, there's a muted effect because it benefits one and hurts the other. Again, these are so well suited, and the fact that you're vertical, meaning you're at the same expiration date, then it's going to have the same effect on both. Vertical spreads are fantastic ways to trade through earnings. I would not trade a diagonal call spread through earnings. Why? Asymmetric risk. All right, I'll talk more about that in the future, I'm sure, but I just want to get that out there. I've had a lot of questions about that lately. Next up, materials. This is a sector that has deteriorated as well. As you've noticed, I've got a bear in utilities. I got a sideways in real estate. I had a bull in financial, and now I got a bear here. Does everyone see how I'm actually this week looking to put on more bears than bulls? Not because I'm bearish, but because I've been leaning on a very bullish portfolio for the last 2 to 3 weeks. I got the move I wanted. I can just pull that back, not by exiting trades, but by entering new trades that are less bullish. I'm going to pull my whole net delta down and make it a little bit safer if we do get a pullback. This here is AEM. I like the gold sector quite a bit. I think it's looking really awful. Even though gold's looking decent, the miners are just looking terrible. We broke through the support. We came down. We're putting in a little base here. We do have some support maybe down here at the 47 area. But again, you don't have to look that far. You don't have to look that far. I'm looking at doing a 48.50. 48.50 bear call spread. It's down to here, 48.50. This is what I'm looking to play here, this area. If it's below that by expiration, max gain. If it's above that, max loss. If it's between the two, it's going to be something, a gain or a loss based on where the midpoint is. You can play these again. These are great ways to really isolate a stock and really take a lot of the risk of things like surprises or earnings or something with these vertical spreads. That's what I got for you this week. If you want to share some more trades with the rest of the group, you guys know where to go. Log into the website, go to the forum. Let's get that discussion going. Wrapping this up, I think it's very possible we get a pullback. I think we probably get 1 or 2 more days, and then I think after a 1-month base, I don't know if we have enough energy to break higher after the year we had last year. But it's a +3. You need to be in a +3 in your portfolio. If we get a pullback, just make sure that you can handle that. You want to be bullish here. On a pullback, I'm looking to get into more bullish trades. Watch the sectors. I'm telling you, there are a lot of sectors that have really good looking shorts in there and a lot that have good looking longs. I think this is a great opportunity to make money pretty much on all your trades as long as you're in the right place. That's it for me. Thanks for joining me. Everyone have a great weekend. Goodbye, everyone.